Hi, I'm Nicholas Schneider, and in our previous video in November 2017, I commented that LNG exports and shipping rates were increasing, and that the outlook for the final months of 2017 looked promising. Well, this certainly came true, with LNG shipping rates recently reaching their highest level in almost 4 years. So please keep watching for an update on LNG markets and an outlook on the year ahead. In total, global LNG exports increased by approximately 29 million tons in 2017, or 11%. This growth was particularly strong in the fourth quarter of the year due to the startup of new export trains at Sabine Pass in the United States and Wheatstone in Australia, as well as the ramp-up in projects that started earlier in the year. In addition, in December 2017, the first export train started at the Yamal LNG export project in northern Russia, for which Teekay delivered its first 50% owned ARC-7 LNG carrier new building. The growth of LNG demand in China has been a major factor in absorbing these new LNG supplies. China's imports increased 45% in 2017, and China surpassed South Korea to become the world's second largest LNG importer this past year, behind Japan. This growth was particularly evident in the second half of 2017 as China shifted millions of homes and businesses across northern China from coal to gas-fired heating in an effort to combat poor air quality. While China was responsible for the largest growth this past year, imports also increased in Europe as well as in Japan and Korea, partly due to colder than expected weather and nuclear outages. The strong increase in Chinese LNG imports, along with outages and delays at some LNG export projects, helped drive LNG spot prices in Northeast Asia to the highest level in over 3 years, which resulted in more LNG cargoes being shipped long haul from the Atlantic to the Far East. This helped tighten the LNG fleet availability, resulting in broker-assessed spot charter rates for LNG vessels peaking at over $80,000 per day in December 2017, which were the highest rates in almost 4 years. Short-term rates have since started to ease as the market enters its seasonal low. However, rates remain significantly higher than the same time last year, which demonstrates a tighter LNG fleet balance, which should continue to support charter rates in 2018. Looking ahead to 2018, we expect 25 to 30 million tons of new LNG export capacity to start up this year, which will be on top of the 15 million tons of capacity that started up later in 2017. Some of this new capacity includes the startup of the Cove Point and Freeport projects in the US, the Ichthys project in Australia, as well as additional export trains at Yamal and Wheatstone. In total, we expect that the global LNG export growth in 2018 could be the strongest since 2010, during the previous ramp-up in exports from Qatar's megatrains. In the longer term, it is also encouraging to see that several proposed LNG export projects, which were delayed after the drop in oil prices in 2014, are now progressing again towards final investment decisions. Since the start of the year, Cheniere has signed new offtake contracts that they say will support the development of a third export train at their Corpus Christi export project in the US Gulf, and Anadarko has signed a contract from the proposed LNG export project in Mozambique. Overall, stronger energy prices may support an increase in new investment activity this year, which would be a positive sign for the long-term growth in LNG trade and shipping demand. In summary, 2017 ended strong for LNG shipping markets, and we look forward to a firmer market in 2018, as well as a potential recovery in FID activity this year. Thanks again for watching, and we'll be back next quarter with another update.